Hi, my name is Kyle Barnhart, and I want to teach you a couple of accounting principles so that you understand what's going on in my honors portfolio. So the first thing I want to do is go over some financial statements. The first one I want to go over is the income statement, which is basically a year-long summary of what the company has done. It's defined by its revenues and expenses. The second is the balance sheet. The balance sheet just kind of tells us how much stuff the company has at the end of the year, and they're classified either as assets, liabilities, or equity. Now these three things are taken together to form the accounting formula, which is where assets equals liabilities plus stockholders' equity. Now, under these classifications, there are all sorts of accounts, and these accounts are usually divided between debits and credits. The debits are always on the left side, and the credits are always on the right side. Now, assets increase with a debit, but liabilities and stockholders' equity increase with a credit account. So when you're making journal entries as an accountant, what you'll do is in this first example, we see that we have an increase of cash, which is debited. And where we get that cash from is from sale of stocks. So we actually increase an equity of stocks and increase assets, which balances out the equation on both sides. In the second example, what we have is accounts payable. What this is basically just like a payment of a bill. So what happens here is this is debited, and as a liability, a debit goes down, whereas our credit is actually cash this time. So we decrease our asset and decrease our liability, which also balances the formula.